This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back here to the Research Talks podcast with Alan Green and Dan Flynn. So it's good to be catching up with you guys in what's been a very hot week. And Alan, you were baking at Ascot, I believe, only yesterday.
I was baking at Ascot. It was brutal is the term I've been using for when I've spoken to people about it. But it was a great day out, terrific day out. The journey on the train was a bit of a nightmare. It was your proverbial sardine can without air conditioning or failing air conditioning anyway. But yeah, the day out was great, and thanks to my dear old buddy Keith, and also sitting with my colleagues John Brennan and Trevor Coote, we had a strategy with which to attack the race itinerary, and we were going for wins, going each way, and I came out slightly ahead. Trevor had a very good day. John, I think, was just about break even, maybe slightly behind, but it was all about lots of beer, and it was all about it was just great fun, but
good,
way too hot.
But yeah, hot, very warm. Okay, and Dan, what's it been like for you this week? I mean, we've seen a few things going on certainly in the crypto space, haven't we? The treasury space, with of course Coincilium doing very well recently.
Yeah, absolutely. Like all of us, struggling a bit in the heat this week, but it does feel like a bit of life is coming back into the markets. I'll talk more on Panther in a moment, but I did think it was interesting what Darren, their CEO, was saying to you in your interview about the Winston deal only being able to come together because the markets have improved. I think he said the market's now moving and the company will move with them. I think that's pretty bullish. If we can see more deals like that, along with like this continued excitement around the Bitcoin treasury space that you mentioned, then the London markets could start to get a lot more interesting pretty quickly.
Yeah.
Well, it's about time, isn't it? Because, we've had 3 years, and last year was particularly hard. And I think I actually said, probably to you, Alan, maybe it's on one of these podcasts, that if another year, if we have 2025 like it was last year, it's going to be really, really hard. I think I made the analogy that there's lots of cuts, and now, we're going to start losing limbs if it carries on. So, I mean, it's interesting to me that it's happening in June, because this is traditionally when it does go very quiet. So I'm obviously very pleased about that. But like you said, Alan, last week, you're in the city and brokers were talking a lot differently, and as I said, the noise has turned up a lot recently. We're hearing the same thing. There's some deals being done. There seems to be a lot of let's say buoyancy, but optimism coming back, and the noise has definitely ramped up. And then when you see things like Coincilium doing very well in that space, and of course Vinanz as well, who've also got they should be buying their Bitcoin today, I believe. I think their funds from their wrap settle, and that's started to move. It's still got a fair way to catch up with the other boys. But then I also see, we did the Q&A with ECR last night on Telegram, and it was fresh news that they've got a digital strategy that they're going to announce, and I think other mining companies are perhaps going down the same route. So it's good. If there's capital flowing back, fantastic. That's really good, because it's about time, and we can get back to really enjoying it. So that's very good to see.
I think it's there is a real sense that, but actually, there's been a reasonable amount of optimism for some time, but there's been no action. But I think it takes a catalyst or something like Bitcoin Treasury to perhaps get the markets moving again and get stocks moving, so investors are making money. And once that starts to happen, it has that the domino effect. A company that say has been trying to raise money for 6 months and hasn't been able to, all of a sudden finds it can, because there is now more interest in the market in general, and is able to raise money. And that's what we're going to see, I think, from here on in. But I can remember back in the dot-com boom days, of course, I think it was 2003, everyone was saying, selling may go away, but it had been a quiet start to the year, and then all of a sudden things started to get going. And it just motored all the way through the summer. It didn't let off in May, got even busier in June. And I think that's what I'm hoping that's what we're going to be seeing this year.
Indeed. Okay, well, we're going to actually talk about a mining company first of all, Panther Metals. Darren, that is the CEO. Dan is going to talk to us about Panther Metals, who again, they did do quite well this week. I mean, their share price is doing all right on the back of that deal, which is pretty significant, isn't it? They've actually now got a resource that they can actually go and will build on, and also that low-hanging fruit with the tailings.
Yeah, absolutely. It's really been an excellent week for Panther. So the company not only announced the acquisition of the Winston zinc, gold and silver project in Ontario, Canada, but also the appointment of an established new advisory board member in Julian Bosch and a collaboration with Panther Metals to reprocess the tailings at Winston. They could put it into gold production and near-term cash flow generation over the near term. So like you say, the market's responded well. Last time I looked, Panther shares had risen from 45p to 62p since the beginning of the week. But with the company's market cap still at just 3.5 million, you can't help but feel the significance of these developments is yet to sink in. So I thought it'd be a good opportunity to go over them in a little more detail. So first, Winston. So here, Panther has consolidated two projects in Ontario, one from First Quantum and the other from Frontier Energy. And they have been de-risked heavily. Frankly, it's really impressive what Darren and the team have pulled off here. The project has a high-grade indicated resource of 2 million tonnes, averaging 17.9% zinc, 0.8% copper, 0.4 grams a tonne gold, and 34 grams a tonne silver. And a feasibility study in 2021 gave the project an NPV of 175.8 million Canadian dollars, along with an annual EBITDA of 67.6 million Canadian dollars over an initial 8.5-year life of mine, with operating costs in the lowest quartile for projects globally. And there's upside as well. First, the feasibility study is based on zinc, copper, gold, and silver prices in 2021. So I won't go through them all, but suffice to say, pretty much all of them have risen significantly since, potentially providing an immediate uplift to the economics of the Winston project. There also exists strong potential to increase Winston's life of mine through exploration, down dip, and along strike of the current resource. And I think Darren put the significance of this to you well, Mark, when he said that when you start to increase life of mine, you add a lot of zeros to the valuation of a project. So objectively speaking, I think it's pretty impressive for a company of Panther's size to be holding such an advanced project with that much potential mineralization, particularly when you consider that Panther already has a number of other decent projects in its portfolio. So the big question, of course, is funding. How much is it going to cost to realize the value of that project? The capex requirement outlined in the feasibility study is 145.1 million Canadian dollars. So it's a lot, but that's always the case, isn't it? And Panther has been proactive in its approach to covering this. As Darren said to you, the company is looking to get a 100% loan guarantee scheme for the project through the UK government. So the company would basically have a funding partner that would lend the money to build Winston, and the UK would provide 100% guarantee on that loan. All Panther has to do is bring at least 20% of the metal produced at the project through the UK. So there's that. And in its RNS, Panther said it was advancing towards the execution of a letter of intent with a bank for a funding strategy in that respect. So maybe we'll get an update there soon, but it's quite promising. And alongside that, perhaps most excitingly over the short term, Winston also contains a very significant tailings storage facility from back when First Quantum were producing from the project. And a couple of days after the acquisition, Panther announced a collaboration with Panther Metals, so another London company, to investigate commercializing those tailings. And this could provide the company with a source of near-term cash flow. Getting a tailings operation live isn't like building a mine, it's far quicker. And when you spoke to Darren, he indicated that there could be as much as 100,000 ounces of gold in that tailings pond, using very rough estimates, of course. So we'll learn more about the actual number in time, I'm sure. But at current gold prices, that sort of scale could go a long way to supporting the funding for the main mine at Winston. So in summary, it's pretty fascinating to see a company of Panther's size secure as significant and de-risked an asset as Winston. I think Darren called it a mid-tier asset, which is being held by a junior. And the fact that Julian Bosch, who was part of the management team that took Trident to its £144 million sale to Deterra, has come on board, probably speaks measures to the opportunity here. So I'll definitely be watching this one over the coming months. I think it could be really interesting.
Yeah, I don't know what you think, Alan. Of course, you've covered Panther with us quite a bit before on current projects, through different iterations and moving some projects on to Fulcrum. They have a good relationship with Fulcrum. What do you make of this Winston deal that Darren's now done?
I think it's a pretty seismic deal, actually. I think it's a real game changer for the company, and the great thing, I mean, we've all known Darren for a number of years. I mean, Darren is very much poacher turned gamekeeper in the sense that, of course, he was a retail investor originally, and then moved into his role now at Panther, and I think he understands the markets better than most CEOs. He understands what the markets need, and also how to build and put a company together. But to secure an asset of the quality of the advanced nature and the size of Winston, at that level is no mean achievement. And I think I think companies come of age, and I think they do the hard yards and come of age. And I think he's timed this perfectly, because with the upswing we're seeing in the markets that we were discussing a little earlier, I think a deal of this scope and nature feeds really nicely into that narrative. And I think with Darren, obviously his job now is to develop that as quickly as is feasibly possible, but he will. And of course, the news flow on that will fall on fertile ground, in that the investors that are coming back and looking at companies like Panther for the first time for a while will be hearing all the news they want to hear to encourage them to buy the stock. So yeah, great move, great timing, and big tick in the box. But the market likes it, as can be seen. I mean, the share price is up 66% over the last month, and it's obviously been moved hugely last week on the news. So yeah, big feather in his cap.
Well, yeah, what I like about it is now suddenly Panther have a project that has an existing resource on it and in situ gold, as you say, with the tailings there. It's actually amazing that if 30% was recovered, there's basically 70% of gold still there from the original resource, which is quite something, really. Now, I know Fulcrum are a little bit off. They obviously made big strides with that exclusivity agreement with Extract, but they're still a bit off, I would say, getting that actually working on the ground. But suddenly, like I say, Panther has now got an asset with an NPV, whereas before they had what looked like good projects, but I want to kind of say a lot of smoke and perhaps not the fire yet, So they'd found a lot of stuff going on, but where's the actual core of it? Where's the actual interesting bit? So no doubt they'll probably find that. And I know Darren's mentioned majors are looking. Majors probably always going to be looking. And it looks interesting, but until they sort of hit that fire, if you like. So it's nice. It's nice, more than nice. It's great, I think, that they've managed to get this up. And now Panther is a company with a resource. I'd just like to see it be really taken advantage of and pushed forward as quickly as possible. Don't know what the best way forward is. I wouldn't want them sitting around and waiting for Fulcrum. So maybe they can get on the ground and do some resource estimating, maybe the tailings, perhaps. I don't know.
Yeah, bit of exploration, maybe.
A little bit of exploration. Yeah. If they want to take it all the way, like you say, 12 million, it's a lot of money, but it's quite easy to find when you've got a robust feasibility study. So maybe some work on updating the FFD feasibility would be nice to see as well.
If they can fast track that. Yeah. Exactly.
Okay, good. Thanks, Dan. Thanks for that. So, Alan, a new one, Manolete.
Manolete Partners, yeah.
Manolete. Excuse my ignorance. Yeah.
Well, it's been pronounced Manolete, Manolete. So yeah, it's anyway. Manolete Partners, company are listed on AIM. They have a market capitalization currently of 38 million. Share price is currently at 87.5p. It's come off over the past year for various reasons, but we're in the run up now to the full year results, which are going to be announced next week, June 26th. So this is I'll explain why this is I think a bit of a threshold moment for the company. So the company it's the UK's leading insolvency litigation financing company, and it funds or buys insolvency claims and claims the service is simple, fast, effective, and fair. There are numerous case studies that you can see on the company's website, and the CEO is Steve Cooklin. There are many interviews out there with him explaining the process, but they often work on a three-way partnership with IPs and lawyers to resolve these claims and bring these claims to fruition. So the last few years, I mean, there's not a huge amount of news flow with a company like this. It's usually based around a new partnership or the results statement. So just going back to last year, the company produced a pretty strong set of full year revenues, but and also we saw a big increase in the amount of live cases. Cash of 1.4 million at the end of the year, net debt of 12.3 million, and that number is on the way down. Very strong start to the current year, and significantly at the end of November, it was named by the Financial Times as the European long-term growth champion stock, and the criteria used to measure this is compound growth over a 10-year period. So that's a pretty impressive award for a small company listed on AIM, but there's a big prestigious FT award for the company. Fast forward into 2025, the company announced a new revolving credit facility with HSBC, still at the same level, 17.5 million, but the fees being charged, or the interest charge, is less. It's down to 4% as opposed to 4.75%, and also a non-utilization fee. So to have it sitting there is now 1.4. They've been charged 1.4% for that facility as opposed to 1.9% previously. So that's obviously going to add to the bottom line as they go forward. The only fly in the ointment was that on April in April, the chief finance officer, Mark Taverner, suddenly left the company. And obviously with a long-established company, particularly a company in this sector, for the CFO to suddenly leave obviously raises a lot of question marks. And Steve Cooklin, the CEO, was at pains to point out that the search was immediately underway for a replacement CFO, and all would be revealed in due course. That's not yet happened, and I suspect that's why the share price has basically been sitting on its backside. Although after the announcement, the shares popped up briefly, but have since come back down just off those year lows. So I think, and I hope, given the company's track record previously, and the fact that that they're recognised by the Financial Times, I believe this company will turn the corner and will deliver a strong set of full year results. They provided a trading update, which looked very good indeed. The company in the trading update running at the end of March this year, they reported that new case investments up to 282 from 276 last year. Record new case referrals, nearly 900 referrals compared to 731 previously. 11 case completions, also a record of 272 versus 251 previously. Gross cash recoveries now at 25.6 million, up from 17.7 million previously, and also net cash income to the company from completed cases of 13.3 million. That's up from 10.8 million previously. And estimated total revenues for the year are going to come in at just over 30 million, 30.8 million versus 26.3 million last year. So if that's the case, with a market cap of just 38 million, there's very little premium in that. You've almost got the actual value of the turnover representing the market cap on AIM. So there's no real premium in that at all. I suspect it's down to the departure of the CFO, but they're estimating a better EBIT number, 3.2 million. Net debt also reduced to 11 million from 12.3 million. And Steve Cookland has said the company hit record KPIs across all key metrics, and the business is continuing. They anticipate the current performance trend will continue for as long as. So, given that's the case, and given the results next week back those statements up, then I think this could offer quite a strong or quite strong recovery potential.
Mm.
So how long has this been on your radar for then, Alan?
Well, I have spoken about Manolete before. It's one of the, again.
Yeah, I thought so. Just when you were talking there, I thought I recognised some of this. Yeah.
I've spoken about it before, but I think because it's not a kind of dynamic news monster in that it's churning out announcements every week and new deals here and new deals there. It just chugs along in the background and it generates a nice bit of cash. As and a lot of the companies we've spoken about, or I've spoken about over the past few weeks, Ramsden FX and Premier Martin and others. These are companies that are just quietly going about their business and turning over decent money, generating good EBIT, good profit before tax, and all the rest of it. And this is another of these plays. And often the opportunity with companies like this is to get in when something like this has happened. And the fact that the CFO left, poor guy, I mean, who knows, they still haven't replaced him, but that could well come next week with the announcements of the full year results, because it would be timely to announce the new CFO along with the full year results. That would be a good move, I think, for the company strategically. But if that happens, and if the numbers are where they are, and also the current trading is blazing a trail, then I think there's a good case that we could reasonably expect the shares to pop back up. Perhaps pop back up above £1 a share again. Who knows?
Mm.
Okay, good. Well, thank you, Alan. Thank you for that. So, is it Vinanz now, Dan? You're going to bring us up to speed on Vinanz, yeah. The one that's
So given so much,
go to Bitcoin.
Yeah, basically. So given so much attention is on UK Bitcoin treasury companies right now, I thought it might be remiss for us not to mention it. I thought, with that in mind, I'd follow up on one we've discussed a few times on here already, which is Vinanz. So, like its peers, the company has adopted the flywheel approach pioneered by Michael Saylor at MicroStrategy, now Strategy. In very simple terms, this is a self-reinforcing cycle where money is raised to buy and hold Bitcoin, which increases the share price of the company, enabling increasingly large sums to be raised to purchase increasingly large sums of Bitcoin. So this flywheel is very much a strategy for those who believe in Bitcoin's future. And that's looking increasingly secure the longer it stays over $100,000 and the more widely it's adopted by institutions. And the flywheel strategy is now being deployed to excellent effect already in the UK by companies like Coincilium and the Smarter Web company, which we mentioned up top, Coincilium, I think. Smarter Web, most notably, is now seeing its share price increase by more than 16,000% since it came to market less than 2 months ago. Yeah, it is. On Twitter, I saw a stat showing it's now the best performing IPO in the history of the UK. So there's a stat for you. No, well, I need to check the accuracy.
The best performing, Twitter, yeah. But
yeah, that was on Twitter.
That's a pretty huge claim, but wow.
Yeah.
It's a big claim.
Yeah.
I'm worried now I've said that. I'll have to go and back that up. Yeah. So we know the strategy works so far, at least. We'll see over the long term. And Vinanz is one of the new crop of companies looking to replicate the approach for its investors. So it's not as far along as SmartWeb and Coincillion, but the company has pivoted pretty quickly into the space. I mean, it was already and remains a Bitcoin miner. So the move into becoming a treasury first company earlier this year wasn't as out of the blue as some others we've seen. Good example being the natural resources companies we're now seeing adopt Bitcoin treasury policies. So Binance kicked things off last month by securing a $4 million bridge financing facility, used the first $2 million tranche to buy 16.9 Bitcoin, deepening its position. It then appointed crypto expert Huey Rattray as its new CEO, and then it announced plans to rebrand as the London Bitcoin Company, which emphasizes its goal of providing listed Bitcoin exposure to investors. So Binance had frankly struggled to gain the traction of its peers. As you pointed out when you spoke to Huey, Mark, its share price had actually declined slightly since adopting its treasury approach. And Huey put it well when he said the company had a lot of catching up to do when it came to sentiment. But I think it now looks like that could be changing, and the catalyst has been the wrap retail raise the company completed this week. So Binance was originally aiming for £1 million at 13.75p. It ended up being heavily oversubscribed, ultimately raising a little over £3.5 million. So these funds will immediately be deployed to buy Bitcoin. I think in your interview, Huey said in as little as a few days. So I imagine that's around now at the time of recording. And the result has been that Binance's share price has risen from around 13.9p to 23p in a couple of days. So that's good. It suggests the market is noticing the company, and I imagine investors are looking at the gains that some of Binance's peers have generated, and they're hoping that now this traction's been established, these early gains will turn into something more. But what would be key to that is how Binance executes from here. Huey said we can definitely expect more raises to buy more Bitcoin. That's probably what we'd all expect at this point. What I thought was particularly interesting were his comments about looking at other ways of financing Bitcoin purchases. So he said these could include fixed income opportunities like Bitcoin-backed bonds, as well as making greater use of its existing OTC listing and its imminent NASDAQ listing to market to American investors. In fact, I think he said the process for doing that is being expedited. So in summary, I don't know how any of this will play out, obviously. The space is unprecedented and the moves we're seeing are frankly unbelievable across all the companies. But from here, I'll be watching to see if Binance can continue to build on the early traction it seems to have generated this week. Over the long term, if it can really tap into that North American market, then that could really unlock some value.
Absolutely. It's definitely the one at the moment that's a Bitcoin treasury play on London that hasn't moved, which is interesting. I'm not sure why. I see when I watch the order book, there's quite a few big, they look like sells. So there's possibly an overhang there. I'm not sure where that's coming from, but perhaps when that clears, it will allow the share price to start its sort of movement up. But it's the only play on London, isn't it? On the actual main board of the LSE, as the Bitcoin treasury play, effectively, yeah. Of course, they've got the OTC, as you mentioned as well, but soon to be NASDAQ, which is pretty significant. So
yeah, that's going to be huge.
Yeah, the interview with Huey was pretty bullish, I thought. Yeah, he wants to do quite a bit with that, about just raising and buying Bitcoin, but also opening the company up to other plays like options and that kind of thing. So I think there's no stopping. I think they're going to go for it, and it's quite good to see, because of course we've covered Binance for a while, and it was a mining company, a Bitcoin mining company, and that's still going on. But the treasury element is clearly where the appetite is for investors, and they're just going to go hard on with that whilst continuing with the mining operations.
So make the most of it.
Exactly, yeah. So good to see. Alan, do you have any thoughts before we finish with Harena?
Yeah, no, just to say, I think Huey, latterly David, and of course now Huey are doing a great job of setting the stall out. But the pivotal moment for the company, I think, is going to be the Nasdaq listing, because all those North American investors will be able to, directly buy on the Nasdaq, the London Bitcoin Company, which is a pretty cool name. I think they've got that
Indeed.
right. Yeah,
Mm.
that's pretty cool. It's prestigious, and yeah, the strategy with options and the other ideas that are coming out. I'm sure there's a load more behind the scenes that's going on, and a load more we're going to hear about. But it's exciting, and of course the arbitrage that will take place with the London price alongside the Nasdaq too should be we should see some fireworks.
Yeah, the name is good, isn't it? And of course, the ticker BTC on
Yeah,
Yeah.
BTC is great. Yeah.
is pretty good to lock that up. I
Yeah, just
believe
with
they're doing. Go on.
just with your marketing hat on, it really is a great name, and I think
Mm.
it'll resonate really well across the Nasdaq.
Yeah, absolutely. I believe there's some an interview, perhaps, or an event, maybe at the LSC early next week with them. I've seen that going around, so that's something perhaps to keep an eye on as well.
Sure.
But yeah, good stuff. Okay, well, thanks then. So let's finish off, Alan. Harena Resources. Give us the latest on this company.
Okay, Harena Resources. Well, I think we're talking about companies benefiting from renewed interest in the market and investors coming back. And I think this is one company that investors that maybe looked at the company and moved past it should re-examine, because it's a late stage rare earths project. Harena, of course, is listed back in March this year. It raised 1.3 million at 3p, and the share price since that time has basically fallen, which is not uncommon and pretty much in keeping with many stocks in that space. But I do sense there's a real recovery opportunity here. The company is the owner of the Ampasindava rare earths project in Madagascar, and this is an ionic clay rare earths deposit with a defined mineral resource estimate of 628 million tons at 895 parts per million total rare earth oxides. Now, there isn't a JORC on this yet. There's an NI 43101 report on the asset. In terms of the work done to date, extensive metallurgical test work, sampling has been completed. Heat leach processing, which produced very acceptable mineral yields. And then back in April this year, we heard from the company that SGS and the University of Toronto reported some very strong results back from 54 samples taken from just below the surface. Now, part of the attraction of this asset is that it's an easy to manage asset. It has low impact on the land and on the surrounding environment. And the plan is with any asset like this, it's in a particularly beautiful part of Madagascar, and rehabilitation of the land after the minerals have been extracted is a key part of this. So at the end of it, the land will be returned to as it was, and you'll never know that Harena were there doing their work. And what they're doing in order to achieve this, that as they extract the soil, that the soil is then washed and returned and stockpiled and ready to go back in as soon as the work has been completed. And that's then seeded, and the area that's been mined is revegetated, so it's returned back to its original status, which is really important. Really important. So from the metallurgical testing back in April, we heard from the then CEO, Joe Belladonna, and he said that the results from there was a raft of results that showed neodymium, praseodymium, dymium, terbium, and yttrium results. They demonstrated that the Ampasindara asset is a low risk, environmentally friendly, and ecologically friendly asset, and is technically very viable at this stage. Moving forward into May, the company announced that the mining study had advanced further. The PFS is on track for submission to the authorities there in Madagascar, and the project design and the plan for extraction was completed, focusing on near-surface high-grade zones to start with, which obviously makes sense. You know, you take out the high-grade zones first of all before moving on. They're also about to appoint a consultant, a local consultant, to oversee the on-site environmental and screening, what they refer to as social screening, which of course is working at one with the locals in the region there. And then this month, Joe Belladonna, who really oversaw the company as it came to market, has stepped down to become general manager of business development, and the company have appointed Stephen Weir as the new CEO to take the company forward. And Stephen is currently getting his feet under the table. He's formerly worked with RFC Ambrian. He's also currently the chief exec of ASX listed magnetite mines, and has a raft of experience working in assets across Australia and elsewhere. So I think it's poised. The company and the opportunity are nicely poised now for Stephen Weir to take it forward and develop to the next stage. Obviously, rare earths are hugely important now. We know the political backdrop. The fact that China's suppliers are shutting down completely, so there's a rush on to find these assets. And Ampas Indaba looks as though it could play a very important role going forward in the supply chain. So plenty of news to come from the company. I'm going to be meeting with a couple of the directors in a couple of weeks to find out more. So I hope to be able to update you after that. But I think at this point, shares currently sitting at 1.2p. I think there's an awful lot of ground to cover. And a great opportunity for this stock to recover. Currently got a market cap of just 5 million. So I think with a late stage project like this, there's an opportunity for it to be much higher certainly before the end of the summer.
Well, thank you, Alan. Yes, it'd be good to hear what you think when you've met with the board there, when you can report back to us in a couple of weeks or so. But should be
okay. Also, just wanted to finally mention electric guitar as well, Mark. You may recall we were talking about this earlier. I think it's worth drawing investor attention to this. Of course, electric guitar. The company IPO'd originally, set their stall out as a people first data company, and the markets at the time, and I think the general pitch wasn't that well received. So of course the company went into administration, but the actual listed asset turned into a cash shell, and the company announced last week, of course, it has just raised 775,000 to create a new asset where the placing shares in the new company will represent 44% of the issued share cap of the company. So this new company will be a cash shell. It'll be fully funded. And I suspect, given all the discussions we've been having today, the subject matter that is currently top of most investors' agenda, I would hazard a guess that we might be moving to something in that area. But that's my speculation. So do your own research. But just wanted to draw investor attention to that. That's electric guitar, Epicode ELEG.
Okay. Yeah, we might see a few more of these, I think. And I've just noticed the Coincilium RNS, just talking on the crypto treasury. So they've announced that they have purchased another 10.2. So they now hold 43.1 Bitcoins.
Yeah, it's coming along nicely.
That is building nice, isn't it? Goodness me.
Yeah. And I don't think they're going to stop, are they?
No, and I think they've got more cash from their raises in the bank there. So maybe we can expect to see a few more coming up.
Interesting.
Yeah.
What makes a whale? Does anyone know? I know the crypto whale alert. What's What's the criteria for being a Bitcoin whale? I don't know. Maybe we should research that.
Yeah, I don't know what the official.
Is it 1 million or
official,
something?
maybe.
Don't know.
Yeah.
Sounds about right, doesn't it?
They've got
I mean,
somewhere to go.
a million sort of pounds worth I would suggest whale status. So yeah, but I could be wrong. Anyway.
Well, the market likes the news. Shares are up 12% on the day, up to 42p now. So it's just powering on, isn't it? Incredible.
Indeed.
Yeah.
Indeed. Okay. Well, thank you very much, guys. Have a good weekend. Enjoy it if it's warm, and we'll see what the market brings next week.
Thanks, guys. Have a good one.
Cheers, guys.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.